In.
Hey there, folks, and welcome to our Monday Market Review on this beautiful morning in May in 2022. So I hope you guys had a good week's trading last week. I have to say it was pretty quiet, not unexpected, thanks to the raft of major news events coming out. Obviously ending the week with non-farm payrolls, but an unusual week where we also had the Fed fund rates announcement, interest rate announcement from the Federal Reserve during the same week, plus some action from the GBP as well on Thursday with their monetary policy summary and official bank rate statement coming out on Thursday. So there was obviously a lot of news last week, and the market generally seems to take a step back in anticipation for that. But having said that, normally once the news is out, it tends to get a move on and carry on doing what it does. So that hasn't really been the case, it must be said. So it's been a very quiet morning so far on this Monday. And the week ended pretty much in the middle of where it started, which can be seen here on the weekly time frame on the EURUSD. With a weekly candle that really was absolutely nothing at all. So in summary, last week was pretty quiet. Our lower time frame strategy had some action. We actually applied it on Wednesday when the Fed fund rate announcement came out, which normally I wouldn't do that on a lower time frame strategy with news out and about. But it actually did kick into 7 different trades, and we had quite a good evening, it has to be said. So apart from playing around with that, it was pretty quiet, but there have been a few other trades which you will see as we run through our pairs. All right, so folks, as always, if you're enjoying this material and getting value out of it, please make sure that you subscribe to the channel and hit that notifications bell. We've got some really important announcements coming out soon. So if you're not getting those notifications, you won't know about them. We're going to be doing some really intensive training soon, and anyone who is part of or a subscriber to our channel and a member on our Facebook group is going to be invited. So make sure you are ready for that. And of course, if you like this video, don't hesitate to hit that like button. All right, so as I mentioned here, the weekly time frame for the EURUSD, nothing really showing last week, and you can see it here on the daily time frame as well, with a really flat pattern. It's actually a class 4M pattern now with that higher close last week Wednesday, but it didn't really go anywhere, and the market is just floating around in the middle of quite a tight consolidation area. So we're really not doing anything with that right now at all. Of course, that Wednesday action was all as a result of the Fed funds interest rate announcement. GBP USD, really the same picture as last week and the week before, where again we've got quite a solid bearish impulse candle, and of course that also is largely because of news on Thursday it was regarding the interest rate announcements and other numbers for the pound. So this is what it looks like on the daily time frame, and you can see how it rolled over on Thursday. Most of that action was late in the day, so depending on what kind of strategy you're trading, obviously you may well have caught onto a hybrid over there on the lower time frame, but even then, as you'll see, it really, all of that action took place very, very quickly, and not much since then. So as I said, ever since we had these news announcements, the market's been pretty flat. So that's also the reason why we're not really in anything at the moment, but you'll see what there has been as we go through it. So here's dollar yen. Let's just look at weekly quickly first, where an inside candle, even though it is again bullish after, well, several months now of bullish candles, but it was not an impulse candle. So staying within the previous week's price range where we had that winning trade, and actually not getting another one. If you were happy to go with a class 2W pattern here, you would have been looking for an impulse candle to go long on a daily impulse. Well, that didn't happen. Today looks like it's the first possibility of getting an impulse candle, but now we're already too far away from our fractal. So that's not really on the cards for us, but of course you can drop down and use this on the lower time frame. We are in a trend here, albeit not a strong one, with that being a class 2, not a class 1 pattern. But were you looking to take an H4 impulse, then this candle over here, which is the very first candle of this week, at 4 a.m. this morning, you would have gone long, and you would have been able to trail your stop somewhat on this already with the initial stop down there. So if that's you, then that's a good choice. Nothing wrong with that at all. Obviously, you want to be managing that stop because we're pushing up against that prior resistance level. All right, dollar Swiss, another one where on the weekly time frame, another very strong bullish impulse candle here on weekly. So that's definitely valid for trading our daily impulse. But last week didn't give us a pullback. It threatened to do that around Wednesday and Thursday, but it actually didn't, just carried on going. So yet another pair where you couldn't trade on the daily just because of the final selection criteria. We did get a couple of trades here on the H4 impulse. One of them, unfortunately, ended up just getting stopped out at break even, which is a bit sad. But if you, depending on how rigorous you are with your setup patterns here on the execution time frame, if you are reasonably flexible, you could have gone long again over here. Now, there was another potential opportunity in this zone, but of course that's leading up to non-farm payroll. So the prudent thing generally would be to stay out of the market until all of that's over. So keep an eye on that one for the week ahead. USDCAD weekly, we're still inside our channel, testing that resistance level now. So let's wait and see what happens. The USD has been strong, as you can see, even though this is inside of the channel, we have got more than, well, going on 2 months really of bullish weekly candles on USDCAD. And that is represented by a breakout on Friday of our daily channel. Now, initially, last week we noted that the bullish cyclicity here had broken down. Remember, when a trend comes to an end, we get the 3 R's. One of those R's is resumption. Looks like that is what we're getting at the moment with this dollar strength pushing further outside of the HDC channel. So for channel traders, again, another one where you'd be looking to trade on the H4 impulse, waiting for a pullback, which might be what we're getting right here, right now. Right, so Aussie, let's just go to the weekly time frame. And also inside of the channel, just the other way around actually, but testing or coming down towards the support level, looking to test it here on the weekly time frame. Last week, really just quite a big inverted hammer or high test candle, all thanks to that action that we saw first of all with the Fed funds rate announcement on Wednesday night. That just rolled over again and has come all the way back down. So very choppy behavior here on the daily time frame, but it looks like we're getting a bearish resumption as of today. So another one that you may will want to keep an eye out on for lower time frame stuff from tomorrow onwards. And even more so is the Kiwi, where we, as we know, for the last few weeks, we have been outside of our HDC channel. So this has been tradable potentially for those folks who are channel traders looking for H4 daily impulse, I beg your pardon. And that same pullback, albeit much deeper and bearish territory, as we saw in the Aussie, here on the Kiwi. So just didn't get a setup for a daily impulse, that final selection criteria not being met, which is a bit of a pity because the market really has rolled over. But for anyone wanting to trade this on the lower time frame, I think you'll already be short on this one. Again, from first thing this morning, probably using a limit order, you'd be in a bearish trade here now, and you'd have trailed your stop almost to break even. So that's been quite a nice trade for folks first thing in the week. Right, moving on to our yen crosses. A lot of these pictures, again, looking pretty similar. We haven't done anything with the yen over the last week. You'll see here on Euro yen, that inside bar following the bearish candle. So technically, depending on what kind of strategy you're trading over here, you may well want to be treating this as a bullish resumption already. But for those of us who like to use multi-time frame technical analysis, you'll see that that bearish cyclicity has in fact broken down here on the lower time frame. So you certainly are able to now say that we have got the potential bullish resumption or resumption of that bullish trend on weekly with another potential impulse wave on daily. So let's see what happens there. If you were waiting for that as a hybrid trader, then you've probably gone long on this one first thing this morning after last week's bullish impulse candle, helping to give us a ringed low in this area, certainly confirming that bullish price activity has resumed. So that's that one. And of course, because we have reason to believe that we enter the next impulse wave on a weekly trend, that should in itself be a trend on daily. And we are looking for also opportunities on the lower time frame to be able to trade this. It's a bit early, as I mentioned, this is the end of a, well, it's really the start of a hybrid trade. So if you wanted to identify the start of a new trend on that time frame, there's just sort of wait a bit longer. Right, GBP yen, looking at weekly first of all. Here we are very clearly still in a bearish retracement wave of this bullish trend on weekly. So not seeing quite the same activity as we saw just now. And likewise over here, we haven't yet seen, or in fact, maybe we are now. But as of the weekend, as of first thing this morning, this was still a bearish wave. If this low gets ringed today, then we are back to a similar picture as to what we saw on the euro yen. So let's wait and see what happens there. It's all pretty quiet at the moment, has to be said. Looking for some impulsive behavior to take place. Here's the Swiss yen. It's like grading ourselves. We started the euro yen, which is quite bullish. Then we have the GBP yen, which is a bit more neutral. And here we have the Swiss yen, which is definitely bearish. With that lower low on last week's candle, not quite an impulse candle, but definitely still now a retracement wave of this bullish trend. And the bearish cyclicity on the daily time frame still very much intact here. So that one definitely not on the cards right now. Well, CAD yen, this is really floating sideways. So we've got, we did have the retracement week the week before, and last week being a very small inside candle. So pretty quiet markets at the moment. You can see this is really going sideways now. So even though we might have been able to argue that there was a bullish, potential bullish cyclicity establishing itself, well, Friday brought that to an end, bringing that high. So that's an absolute no-go area. Aussie yen also showing some kind of bullish resumption here, with ringing that low at the end of last week. Let's just move our trend lines here, wave lines. So that is absolutely true, but then it came all the way back down again. So let's just go and have a look at that lower time frame cyclicity. Here's one where you can see we did jump into a bullish hybrid. It's really done nothing. It looks like this may well stop out, but it was certainly worth a look. The setup was great. Nothing wrong with that. With that breakdown in bearish cyclicity, giving us a bullish impulse candle. But yeah, that's just not going anywhere at the moment, and that's fine. Pretty indicative of current market conditions overall. And finally, Kiwi yen, definitely bearish, and today giving us a lower low in that bearish retracement wave. And well, let's see. On the daily time frame, maybe we'll get a breakout here. It's a bit early to tell. Excuse me. Let's see where this candle closes at the end of the day. Right, so moving on to our euro crosses, with that GBP weakness last week, you could see the euro GBP came all the way up towards the top of its channel, but we're still really not interested in trading that at all. Much better instruments to look at. Similarly, euro Swiss, even less so, in fact. So even though we've got impulse candles in the weekly time frame, we're really not interested in trading those right now. EURJPY, another inside bar. Many of these instruments giving us inside bars for last week's very quiet week. So that low not yet ringed, but it may well be ringing it in the next couple of hours, in fact. But it may end up also being a non-relevant high if the market does decide to roll over before the end of the week. So again, nothing really for us to look at. If we drop down to daily, you can see that there has been a breakdown in bearish cyclicity. So stuck inside of our HTC channel, no intact cyclicity to look at, no valid patterns, so another one to avoid. It's really the theme, I suppose, of the day at the moment. Things really, really quiet at the moment, looking for things to hot up again. Right, I suppose I can advance this. I know it could actually turn around through the course of the week. Looks like we may well get a higher high. Either way, it makes no difference. All it does is widen our HTC channel, but and we don't have any valid patterns here either. So it is testing the top of the HTC channel. Let's see what happens on Euro Aussie. As you've noticed, we've got Aussie weakness and Kiwi weakness, and that's showing itself here against the Euros as it has done on the other instruments. EURNZD bullish impulse candle in the weekly time frame last week, which means that we've got this breakout already reasonably established on the daily time frame. Once we got that close outside of the channel, close of play on Thursday, one might have been tempted to jump into some lower time frame trades. And as it happens, they actually worked out. But of course, trading around non-farm payrolls, not something that a lot of folks do. But had you grabbed the bull by the horn, so to speak, then you'd be into a nice winning trade. Standard targeting already having hit take profit. Otherwise, you're trading a stop nicely in profit. Excuse me again. All right. Moving on to our GBP crosses, GBP Swiss, nothing doing here for us. Moving rapidly on, you can see a lot of dead instruments, but when you come to GBP CAD, that GBP weakness again really being a strong theme for last week, showing itself here on this currency pair. Another bearish impulse candle on the weekly time frame as part of this established bearish trend, which means that we were perfectly set up, as we probably discussed last week, to look for a bearish daily impulse, which we got, and which I think could take profit sometime on Thursday if you're using standard targeting. Otherwise, you are biding your time on this one, be able to trail your stop at the end of today. Having hit take profit here as well. This was a class 1 M pattern. Depending on where today closes, we've still got the potential for a class 1, at least a class 2 M pattern to show itself through the course of this week. Let's wait and see. GBP Aussie, well, yes, we do now have that high ring. Remember, we spoke about this as being a potential class 2 M pattern. Well, we've got that today being pretty bullish, but that doesn't mean that we can't look for opportunities to trade this. So that's a class 3 pattern that we had before, but with the lower close here last Wednesday, the next time we get an M pattern, this is a potential class 2 pattern. I'm assuming that we're going to get a close at the end of today inside that price territory. So that would make it a class 2 M pattern. So another one where you can keep an eye out. Again, here we're seeing now the GBP bounce back. Both GBP and Australian dollar were weak last week. So, but you can see that through the course of last week, the pound actually was the weaker of the two. And here we have GBPNZD, nothing showing itself on the weekly time frame at all. We've got an engulfing candle there, but not really helping us with much. And here on daily, you can see that the resistance level continued to be respected. We did discuss this a week ago, came back inside the channel, and now we're looking at it again. Here you can see that the relative weakness of both the pound and the New Zealand dollar are more evenly balanced. So we're not trading that. Cut a long story short. CAD Swiss bullish impulse candle on a potential trend on the weekly time frame here. So if you wanted to trade this on the daily with a daily impulse, you would have jumped in already sometime last week. So we actually had a bit of a gap here. So it really gave a much tighter entry than one would have normally expected with the market opening by the close. So that was nice. Hasn't actually got to take profit yet, but we have been able to trail the stop almost to break even. It's basically a break even trade. So that was a pretty standard textbook example. But if you were trading with class 1 and 2 patterns only, unfortunately, that did not cut the mustard. Right. Aussie Swiss weekly time frame, bullish impulse candle, but very much inside of the channel on both the weekly and the daily time frames. We were looking for a potential class 1 W pattern today, not really playing ball so far. Let's see where we end up at the end of today. Aussie CAD, funny week last week, that high test, bullish high test, but really on the daily time frame, you can see that's what it was all about. Quite a deep pullback through the course of last week when we had the interest rate announcements on Wednesday. So that obviously affecting the Canadian dollar as well. but it rolled over, and here we have a bearish resumption in this bearish trend. So obviously looking to confirm itself as a trend with a lower low, lower close, something that many of you folks would this morning already have been looking to trade using the H4 impulse, and a bit of a gap there, obviously, and not giving us a very neat entry. You would have used an ATR stop for this one, and you still haven't trailed it. So that is certainly would have been a perfectly acceptable trade. You'd be nicely in profit, but looking to manage that stop, that risk down to zero. Right, Aussie, Kiwi, here we are very much in a bearish retracement wave, or phase 2 of this bullish trend. That is the daily time frame, however. So biding our time there. Here on weekly, you can see that we did get a bullish impulse candle through the course of last week, giving us a bullish resumption in what is now, well, very much a confirmed bullish trend on the weekly time frame. So you would be looking through the course of this week for a setup for your daily impulse. Pretty straightforward setup. Right now, it's a potential class 1W pattern here on daily, so that's looking positive. Looking at our last two, the last two Kiwi crosses here, Kiwi Swiss on the weekly time frame. That engulfing, bullish engulfing candle, not really telling us much at all. And you can see it's quite a mess here on the daily time frame, following that bearish breakout that we just discussed a week ago. But throughout the course of last week, really just came straight back inside of that channel. So yes, it is still a class 2M pattern. Looking to see what happens today. If we get a bearish breakout on this, then potentially looking to trade that on the lower time frames. But there are obviously better instruments to trade, this being one of them, on Kiwi CAD. That Canadian dollar strength coming through last week, bearish impulse candle, not much of a candle, obviously, that being more of a spinning top. But nevertheless, it is an impulse candle, and it's bearish to boot. So dropping down to daily, this is valid, obviously, to look to trade. Daily impulse has not given us a single possible entry. Our previous daily impulse, obviously, either having hit take profit, or if you were using the trailing stop, then you would have been stopped out for a pretty nice win with that retracement on Wednesday. So it has resumed. If you're looking to short this again with an impulse candle today, you need to use your ATR stop on that. I don't like those because so much of that wave has already transpired. So doesn't mean it's wrong. You just need to make sure that you look to manage your risk down as quickly as possible. Right, so that's the currency pairs. Quick look at gold here on weekly. Last week being a basically just a hammer candle, or a low test. Today, quite a lot of action, obviously, with gold price coming down quite a bit the first day of the week. But we still don't have anything here. There's no valid pattern. We're inside of the channel, although last week did confirm this as a bearish impulse wave. So maybe looking a little bit more interesting on daily with a class 2M pattern. So another one where if you're looking to trade this, we're waiting for a breakout. If you are waiting on your selection time frame for only class 1 patterns, then this one is not going to qualify. But if you accept class 2 patterns on selection time frame, then you may already be dropping down to the H4 time frame to look for an opportunity to short this already. So for those of you who are hybrid traders looking at this pattern, happy to trade this as a short, you will already be in the market and you would have taken a trade at the close of the first candle for our candle this morning. So that one going nicely so far, and you already will be able to, well, you'll be able to trail your stop at the end of this candle. So that one's quite a nice one, but hybrid strategies obviously being usually for more aggressive traders. Now the story obviously of the week last week was the continued bearish movement of the stock markets, particularly the US, well, stock markets across the range of the global markets. So here's the Dow coming back down to that previous low, testing that support level, which is tested twice already through the course of this year. Let's see what happens now this week. So today already pushing south quite strongly. And here on the daily time frame, another one of those pictures. This is also a class 2M pattern. Many of you, I think, have already shorted this last week. And despite the fact that we had non-farm payrolls on the horizon, and it's working out for you. So well done on that. Looks like this one is turning out well. Just remember to manage that risk aggressively. You should be able to get down to a break-even trade by the end of today. That's the Dow. I mean, I prefer the other two, obviously, S&P and especially the NASDAQ. Looking like we're getting the breakout on the S&P here on weekly. And as you can see, more aggressive as well here on the daily time frame. So this one, funnily enough, though, being a class 3 M pattern. But if we go down to the NASDAQ, well, as you know, we've been outside of the channel now for 2 weeks straight. This being a continued bearish movement here on the weekly time frame. So as a channel trader, nicely out of that channel, and likewise on daily. So if you want to trade daily impulse, you'd be waiting for a pullback, but nothing wrong with H4 impulse with another entry first thing this morning. And even if you'd missed that one, we've got an engulfing candle in the last one. So you really, really should be short on one of these markets to take advantage of, well, we won't call it a stock market crash as yet, but it's definitely going down for now. Right, let's have a look at oil. Flat, as you can see last week. Yes, it did give us an impulse candle on the weekly time frame, which tested the top of our HTC channel on the daily. No valid pattern, and quite frankly, as far as I'm concerned, that's still very much a sideways market. So no good for our core trending strategies. And Bitcoin giving us this gap over the weekend. So for those of us who like to buy and hold our cryptos, we're waiting for a technical buy signal. Pretty much one of those things where it's like gold. You don't sell it, you just buy it. Gold and property, Bitcoin as well. So at the moment it's still going down. So looking for as I say, a technical signal to buy up some more crypto. But it was quite a significant gap that's visible here on the daily time frame. Of course, the crypto markets though are open over the weekends. So really, it's just some of our currency brokers typically are not. So that's just reflecting the weekend's activity. But yeah, I mean, if you are trading your cryptos using our strategies, then absolutely, there's only one way to be trading that, and that's down. So the first opportunity with a valid pullback was last week, Friday, and it was also the candle of the non-farm payroll. So you would have been quite brave to have taken a trade there, but nevertheless, had you done that, it actually worked out fine, and you would have had the benefit of this big gap over the weekend. Excuse me. Right. So final point of discussion is our US Treasuries, the 5-year Treasuries, giving us what potential last week, a bearish impulse candle, ringing that previous high, giving us a perfect bearish resumption of this bearish trend that's been going on for so long. So if you are a hybrid trader, you'll be looking for an opportunity to get short there. But really, as you can see over here, all we had was a couple of phase 2s, and we're now seeing this bearish resumption. So Friday's close really was the first opportunity to take advantage of that on this time frame. All right, folks, so that's it again from me, from the instruments that we're looking at. If you got any questions for me, please do pop them into the comments below. I do answer all of the questions that you folks throw at me. And as I say, if you're not already subscribed to our channel, please make sure that you do and hit that notifications bell, because we've got some really, really good stuff coming out shortly, and only folks who are subscribed will be getting the benefit of that. Right, so folks, as always, make sure that you keep your powder dry, always protect downside first and let upside look after itself. We'll chat to you soon. Bye for now.